Good day everyone, this is your European Open briefing for Tuesday, October the 11th. I'm Rafi Boyajan, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So we have another fairly quiet start to the day. We're seeing most major currencies extend yesterday's moves. The dollar has now recouped all of Friday's losses when it fell on the back of a slightly softer than expected non-farm payrolls report. And the dollar's gains come on the back of growing expectations that the Fed will raise rates at its December meeting. Yesterday's big move came from oil. Oil prices rallied around 3% after Russia said that it is ready to join OPEC in cutting output. Other big moves today, we have the New Zealand dollar coming under pressure following some comments from the RBNZ's assistant governor, who said that further easing will be required. The pound also is under pressure today. The pound has now fallen for 3 straight days, and it's likely to close down again today as it's testing the $1.23 level. So let's have a look at the dollar more closely. We're seeing the dollar once again approach the 104 yen level. The dollar's rebound comes on the back of the weekend's presidential debate between Hillary Clinton and Donald Trump, but also after some the tapes emerged of Donald Trump making lewd comments on women, and this has severely hurt Donald Trump's prospects of winning the US elections, and this has been a positive for the markets as most investors favor Hillary Clinton, and this is due to the views that Hillary Clinton will likely maintain the status quo. So we're seeing the dollar extend yesterday's gains. We're also seeing the neighboring currencies, the Mexican peso and the Canadian dollar, also benefit from Trump's slump in the polls. But we also have, in addition to that, the Fed funds futures markets now putting the odds of a December rate hike at just under 70%. This is up from 60% a few days ago. So we're basically moving towards the expectations that the Fed will in fact likely raise rates at its December meeting. We had some well, I guess not as hawkish comments as we've had recently from other Feds, because Chicago Fed President Charles Evans said that he could be fine with a December rate hike, although he expressed some concerns about inflation remaining low. But there was limited reaction to that in the markets as the dollar is basically quite fairly buoyant today. Now let's have a look at oil. We saw US crude touch a new 4-month high. It just came short of its 2016 high of $51.67 a barrel. Brent crude, on the other hand, has seen sharper gains. It rose to a new 1-year high of $53.73 yesterday. Both are slightly down today on profit taking. This week we have a meeting between energy producers in Istanbul for the World Energy Congress, and it looks like Russia and OPEC have made some sort of a preliminary agreement. We have, of course, the formal meeting coming in November for OPEC, and Russia will likely is looking, at least for the moment, that Russia will join OPEC in cutting output. The oil rally has boosted the Canadian and the Mexican peso. Both currencies also, of course, as I mentioned, received the additional boost of Trump not doing so well in the polls. So the Canadian dollar yesterday strengthened to around $1.3140. It's slipped back today as the US dollar has risen to back above the 1.32 level against the loonie. The Mexican peso is also off its highs yesterday. We've seen less of a boost for other commodity currencies, particularly the non-oil commodity currencies such as the New Zealand and the Australian dollars. Both the anti-poaching currencies have come under pressure from the stronger dollar. For New Zealand, we had some comments from the Reserve Bank of New Zealand's Assistant Governor, John McDermott. He said that further policy easing will be required to ensure that future inflation settles near the middle of the target range. So markets are now expecting a rate cut, another rate cut before the end of the year. This sent the New Zealand dollar to 2.5 months low of 0.7058 versus the US dollar. The Aussie has looks like it's followed its New Zealand counterpart downwards. We did have an improvement in Australian business conditions survey in September from the NAB data earlier today, but this didn't really do much to help the Aussie, and the Aussie is currently trading around $0.7555. Now let's have a look at European currencies. Both the euro and the pound have been drifting lower. The pound is, of course, under pressure due to the hard Brexit concerns. So up until we have more certainty as to what's happening with the UK's future relationship with the EU, is likely to press the pound downwards, even if we do see some positive UK data along the way. The euro, on the other hand, is basically coming under pressure due to the stronger dollar, but also due to the ongoing concerns on Deutsche Bank. Markets were hoping that it would have reached a settlement with the US authorities by now, but the latest we've heard from Deutsche Bank that it has yet to reach a settlement to reduce its 14 billion fine, and this has put pressure against the euro, which is coming close to breaking below the $1.11 level. Now let's have a look at today's economic calendar. We can see here the data that's been out already, the NAB Business Conditions Index out of Australia. It rose from 7 in August to 8 in September. The Business Confidence Index was steady at 6. We had Japanese current account data, which was much stronger than expected, but this was mainly due to a drop in imports rather than an improvement in exports. Coming out later today, we've got the ZEW economic sentiment out of Germany. It's expected to improve in October to 4.3, so that could provide a bit of a boost to the euro. The US market is looking fairly quiet. We only have Canadian housing data in the North American session, but apart from that, it's going to be another fairly quiet day. That's it from me. Thank you very much for watching, and have a great day.